I want to bring in to join our discussion the Senior Economics Advisor at Judo Bank, Warren Hogan. Warren, what do you make of the number?
Yeah, hi Kieran. Stronger than expected. Still broadly in line with RBA expectations, but it will be testing their patience, especially given the stronger economic news we've had on the economy in the last few months. The domestic inflation, I suspect, is still up around 4.5%, 5%, looking at rents, insurance, education. It's the global inflation or the goods inflation, which is keeping the number down in the mid threes. So I think this isn't great news. It shows inflation, as you're just saying, is sticky. And of course, I think this adds to the issue that the RBA, rather than looking at cutting rates, could still have to do something on the other side, i.e. a rate hike at some stage, particularly if the economy picks up, because this inflation is just not going away.
So a rate hike potential, I'll get you to extrapolate on that in a moment, but Andrew Clennell, given Warren's take there, Andrew, this, and just in the context of what you said earlier about the various cost of living measures they will undertake, it really does put some guardrails, you'd think, in the government's thinking when it comes to just how much they can fork out come the 14th of May.
Yeah, and that's interesting because these are the couple of weeks now where they make their final decisions on any cost of living relief. And of course, we've got that big injection of the stage 3 tax cuts happening on July 1 as well. Exactly. That's, the Reserve Bank always says, we've factored that in. But is that going to have an inflationary effect? The hope always was this inflation would go or moderate prior to July 1. Well, I guess we've got 2 to 3 months, but it's just so sticky, isn't it? And so, look, they have consistently said, in credit to Jim Chalmers, he's consistently said the only cost of living relief in the budget will be non-inflationary. So rental assistance, energy rebates. I think we can lock all that in and nothing else, essentially, Kieran. But I'll tell you what, if there was another rate hike this year, that would be politically disastrous for the Albanese government. If there was another rate hike this year, as Warren is speculating, that would deal Peter Dutton into the game for the next election. That's how politically significant that is. The government will want the Reserve Bank to hold its nerve. We'll be prepared to put up with sticky inflation for longer before it eventually comes down. And we'll be praying, not just hoping, that the Reserve Bank does not hike rates again.
And in the same breath, they've got to also, as you said, they're thinking now and putting the final decisions on the budget. There's got to be a bit of ownership of this as well, because they don't want any view, you would imagine, in this context of this number today, that this budget is expansionary. Warren, and just to pick up the political and move to the economic, because the political question is, as Andrew rightly points out, it'd be a hammer blow for the government, but if you're going to cop it, better to be copping it sooner rather than later. They don't want it before an election. Maybe politically, if they're going to have to cop one, it's better sooner. What about in terms of the economics? Is it better that the RBA just bites the bullet, given how sticky inflation is?
Look, I think at this stage, they would not be leaning in that direction. What I'm worried about is the economy is picking up momentum again. We're seeing some strong employment numbers. Business activity is looking a lot better this year. Sentiment's improved. But I think, that's going to take a few months to build the case. The reality is, I think if the RBA is brought back into tightening, it's going to be at the end of the year. They'll only do it if they absolutely have to because of said political implications. So, look, this, I think, as Andrew said, absolutely puts some tight guardrails around what the government's going to do in the budget, because it shows you that they have got no room for slippage on inflation. Domestic inflation is still running around 4.5%, 5%. And any extra spending in the economy on top of the $23 billion of tax cuts that are going to be boosting household incomes, I think is really dangerous in terms of interest rates and inflation.
Yeah, exactly. So to drill into those numbers, Warren, you spoke about education, insurance, services broadly is where a lot of this stuff is being driven. And again, it's almost self-fulfilling, like rates go up because rates are rent goes up because rates are higher. Education costs go up, presumably, because schools have to pay teachers more because wages are going up. A lot of this is self-fulfilling. How to try and deal with that's the challenge.
That's right. And that's why you don't want inflation in the system in the first place. It is diabolical, particularly in the presence of easy money. And it's really hard to get out of the system. Essentially, we're trying to do something that's never been done before, and that's get rid of a major inflation without a recession. This is the narrow path. And look, at the moment, the jury's still out whether or not we're going to get away with it. So you're exactly right. One part of the economy has some price lifts. That becomes cost pressures for another part. They put their prices up, and as soon as you see all this happening, it's inflation's entrenched. Good news. Food inflation only up 3.8% in the past year. That's down from a high a year ago of 7.8. So in terms of that daily shop, that is some good news for the community and, of course, probably for the government, a bit of a silver lining.
And for those wealthy without mortgages and so on, not the worst news in terms of rates going up, but for those hurting, a lot of those sit in battleground electorates right around this country, Andrew.
No doubt about it, and they're not prepared to cop another rate hike. I mean, they've already got 12. So they're going to start pointing the finger at the government. And one direction that the coalition can employ, apart from saying you need to cut more in the budget, is that wages argument that you just mentioned, Kieran. So the government's been insistent there's no wages price type spiral. Can the coalition now begin to say, well, that might not be the case? You've ushered through all these wage rises and inflation is hanging around. It's not getting any better. Are you telling me that that's not connected? This has been a real strength for the government. They've been after, they've been after a surplus, higher wages, lower inflation, low unemployment. They're not winning this inflation battle at the moment. To your point earlier also though, Kieran, it does give the Treasurer political cover for cuts in the budget. It does allow him to say, and we've seen some criticism around infrastructure cuts in Western Sydney, which are hard to sell, but it allows him to excuse some of those. It allows him to say, well, look, we want interest rates to go down. We want inflation to go down. Less spending is the only way.
Exactly. And it's so true. And if you look at the politics and the equation of politics right now, the number one aim they would have is start to see those rates coming down before May of next year. And any sense that there might be an early election, if anyone was thinking it, stop thinking it, because it's not going to happen. They're going to go full term. Andrew Quinnell, great to chat as always. Warren, I'll let you just dig into the numbers on the CPI, and we'll talk to you in about half an hour before we go to the press club, just to get Warren's thoughts on a bit more of the detail.